I think ETH goes 10, 20,000 before the end of the cycle, right? Once it's broken through, then it's a gap of air to the upside, and you have obviously all these digital asset treasury companies who are just raising money, and it's going to be even easier to raise money if the asset that they're buying has just broken through its all-time high and it's just ascending upwards. So I think that the sky's the limit, and that really depends on how much capital these companies can raise, how much money they're going to print. I'm not a 4-year cycle guy. If the cycle will last however long the cycle lasts.
Ethereum recently found support near $4,070 after a sharp 15% correction, yet traders showed slight panic despite ongoing macroeconomic headwinds. This resilience, according to Arthur Hayes, underscores why he remains extremely bullish on Ethereum's long-term outlook. Hayes believes ETH could climb to $10,000 to $20,000 before the current bull market cycle ends. He argues that once Ethereum decisively breaks through its prior all-time high, the rally could accelerate quickly as capital floods in. Digital asset treasury firms are already raising funds, and Hayes points out that it becomes much easier for them to attract capital when the asset they're accumulating is rising in value. Supporting this view, ETH futures premiums have held above the neutral 5% threshold, signaling confidence from professional traders even during recent pullbacks. Hayes acknowledges that he is also bullish on Solana, but stresses that Ethereum's larger market size and deeper liquidity make it the primary destination for institutional money. In his view, both ETH and Solana can thrive. However, Ethereum remains the core hub for the majority of significant capital flows. Beyond price targets, Hayes challenges the notion of rigid 4-year cycles often cited in the crypto space. He argues the market will continue to expand as long as liquidity is flowing. Looking ahead, Hayes expects the Trump administration to unleash aggressive monetary stimulus eventually. While the details remain unclear, he believes by mid-2026 significant money printing will occur, fueling a powerful bull run across financial assets, with Ethereum positioned at the center of that surge. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I think ETH goes 10, 20,000 before the end of the cycle, right? Once it's broken through, then it's a gap of air to the upside, and you have obviously all these digital asset treasury companies who are just raising money, and it's going to be even easier to raise money if the asset that they're buying has just broken through its all-time high and it's just ascending upwards. So I think that the sky's the limit, and that really depends on how much capital these companies can raise, how much money they're going to print. I'm not a 4-year cycle guy. If the cycle will last however long the cycle lasts. I don't think Trump they haven't gotten into their groove of how they're going to print money yet. They're putting in all the pieces. They're teasing different ways in which they can do it. They're telling you, hey, we want to run things hot. Here are different ways where he's throwing things at the wall, seeing what sticks in terms of ways to print money. And I think once we get through this Fed question, who's the head of the Fed? How many governors does Trump have that are loyal to him? Does he fire Powell or for cause or some other people, right? There's different ways that he can get what he wants. I think that gets resolved sometime in the middle of next year. And then we have from middle of 2026 until Trump leaves office for them to go absolutely insane with how much money they're going to print.
So you
because again, you cannot win an election without printing money. And the Democrats are going to print money. And so he has to print money. If he doesn't hand out the goodies, then all his boys are not getting reelected. My base case is we are going to have a massive bull market in all types of financial assets connected to anything that Trump believes is important between now and when he exits office. Because again, he's got to win an election. He's got to win an election in 2026. The only thing voters care about is their wallet. Am I richer today than I was previously? And if I'm not, if I don't feel like I'm advancing economically, then I'll just choose the other guy. So they chose the other guy, Trump over Biden, and they're going to choose the other guy. Pick your congressperson or senator who's running in 2026, who is the Trump heir in 2028 versus whoever the Democrat is, right? The Democrats are saying we're going to print money, right? Look at Mamdani in New York. You have AOC. They're ready. We're printing money. It's socialism. Come on, let's go. Like, we're giving the goodies. So Republicans, you giving goodies? You're not giving goodies? Okay, I'm staying home. I'm not voting. I'm an advisor for UPXI, right? A Solana digital asset company. So do I believe Solana's going to go up? Absolutely, it's going to go up. Do I believe it's going to go up more than ETH? I don't know, probably not. But again, ETH is a bigger asset to move, but there's a lot of money chasing it. So it's going to be an interesting race between Solana and ETH in terms of who moves faster. And again, it doesn't mean that one loses, right? Everyone's going to make money in this sort of situation. So the trade is really, you're paying $2 for $1. Why? Because you believe in the the effects of passive indexing and how that works, right? So if I am, I just got off a call with, my advisory call with UPXI, and I'm like, hey guys, like, what do you guys need to do? Well, understand which indices could include your stock, which fund managers have a mandate to buy certain types of stock. Okay, what is the average daily trading volume you need to hit? What is the market cap you need to hit? What exchanges do you need to be listed on, right? And so it doesn't matter what the company does. It doesn't matter what the asset is. As long as you meet these criteria, these investors, these fiduciaries, they have to buy your stuff. This is the MicroStrategy trade. This is what Michael Saylor has pioneered. It's in what, S&P 500 or NASDAQ? I don't know.
It's moving into the S&P 500. Apparently, in a couple of weeks, it's going to move into the S&P 500.
Right. So this is a rebalance trade. And this is something I used to do in TradFi a lot, which is, okay, I know what's going to get included into the index. I know the total amount of capital that must buy this and sell that, right? And so this is what a retail investor has to understand. Okay, well, I'm looking at UPXI. Okay, well, here's this company. Here's how it's categorized in the TradFi ecosystem. It's a tech company or whatever, right? Okay, so I know that Vanguard and BlackRock and State Street and these guys have all these funds. And the fund manager can buy a stock or include a stock if it hits these criteria. Do I believe that the management company of UPXI is going to be able to hit those metrics? And if so, then I'm going to pay $2 for $1, because when these flows come, they don't stop. The passive manager does not care what the company does. His screen says buy this stock because it's in the index. Okay, I'm supposed to follow the index and I buy the stock. That's the trade. That's it. It doesn't matter.
Arthur Hayes argues that most people are not thinking big enough about how the United States could leverage stablecoins as a strategic tool in the global financial system. He explains that stablecoins give people access to US dollars worldwide, even in regions where regulators would prefer citizens not to use them. By issuing dollar-pegged stablecoins backed by US treasuries, issuers not only earn a yield but also help recycle eurodollar flows back into US markets, thereby strengthening the dollar's global dominance. Hayes predicts that by 2028, as much as $10 trillion worth of dollar stablecoins could be circulating globally. Once individuals and institutions hold these stablecoins, Hayes believes the natural next step will be to seek higher yields than the 2 to 3% earned from T-bill backing. This is where crypto-native yield products come into play. He highlights Athena as a prime example, as it packages the classic basis trade, shorting perpetual swaps or futures while going long on spot crypto assets, such as Bitcoin, Ethereum, or Solana. According to this model, Hayes argues that Athena has the potential to generate hundreds of billions of dollars in revenue. He even suggests it could surpass Circle within the next year and become the second largest stablecoin issuer behind Tether. While bold, Hayes insists the mechanics of this system make it a realistic outcome. In his view, stablecoins will not only cement the dollar's strength but also reshape the future of global finance through crypto-linked yield products. Let's get back to the interview.
I'll move a little bit higher. So I have a macro thesis around stablecoins. I'll be speaking about this in Japan on Monday. The essay that corresponds to the presentation will come out Monday or Tuesday next week. And essentially, I'm arguing that people are not thinking big enough and how Besant and Co. are going to use stablecoins to reverse some of the de-dollarization. And by that, I mean take Eurodollar flows and bring them onshore to the US and bank the global South and give them dollars, even if their regulators don't want them to have them. And they're going to use a stablecoin as the means to do it. And what's the point? Well, a stablecoin has to earn yield for the sponsor, for the issuer, and so they're going to buy treasury bills at whatever rate Besant is selling them. And so I think that, and I'm going to argue the nice round number, I think that by the end of 2028, we have upwards of 10 trillion in circulation on stablecoins in aggregate, dollar-pegged stablecoins. And what does that mean? And in the essay and the presentation, I'm going to talk about Athena, EtherFi, and Hyperliquid. The first thing people are going to want to do when they've got a stablecoin after they've got 2-3% yield on the T-bill from the issuer is reach out on the yield curve for those who are so inclined. And the safest, and I use safe in quotation marks because of course there's risk in all of these trades, the safest endogenous yield within crypto is lending money to speculators. And that's what Athena is. It packages up a basis trade where you go short a perpetual swap or a fixed date future versus long crypto, Bitcoin, ETH, Sol. What are you doing? You're lending money to speculators who want to go long, and they're getting paid for it in the terms of a yield embedded in this derivatives contract. This trade has been around since crypto's been in existence. I've been talking about it for over a decade. The guy at Athena and his team are just the ones to package it up in the right wrapper, and a DeFi wrapper, make it easy for people to buy this thing. So I think Athena can be earning hundreds of billions of dollars of revenue off of interest income from doing this trade. And once Athena starts, buying back their token, I think per their proposal, they have to hit one more exchange listing or something before they activate the token buybacks. Then Athena goes up, is mooning, right? And so I haven't finished the model yet, but I think this is going to be one of the best performing stablecoins. I think Athena overtakes Circle in terms of circulating supply by the end in the next 12 months. So it'll be Tether than Athena, then Circle or whoever else.
That's a big prediction. That's a big prediction.
It's a distribution game, right? So the tip of the spear are social media companies. Who's going to bank all these people who don't already have Tether outside of the United States? It's Facebook and X, right? If you think about the two dominant, Instagram, WhatsApp, X in terms of social media, right? So Zuckerberg and Musk are going to both roll out wallets. I don't know which stablecoin they're going to choose. Obviously, Tether is the most liquid right now. Maybe I'm sure the Tether team is speaking to these guys and trying to get into that flow. But that'll be interesting to see which one that distribution arm chooses. I'm talking about stablecoins are now a national policy of Besant and Trump. Are they really going to give it to Pavel, or are they going to give it to Zuckerberg and Musk? They're not giving it to Pavel. They're going to go with the American people who are sitting in America and they pay taxes in America and they donate to the Republican Party, right? They're not going to support Pavel or protect him, really. Because what is going to happen is you're basically going to say, going into the Philippines and saying, hey, everyone in the Philippines who is using peso, I know you really want dollars. You couldn't get dollars before because your regulators wouldn't allow JP Morgan and Citibank to open a branch and bank you. But we're going to give you this thing called a WhatsApp account. And everyone in the Philippines has a Facebook account. And now WhatsApp has a stablecoin. Let's call it Tether, whatever, USDT. So now you can request payment from abroad. A lot of Filipinos work in the Middle East. They work around Southeast Asia as domestic helpers. They do construction, all sorts of things. And now they say, hey, don't pay me in your local currency. I want Tether. You can pay through WhatsApp, avoid the banking fees. It's instantaneous. And now, again, the whole of the Philippines is dollarized. And there's nothing the Philippine Central Bank can do about it. And so, but if they can go and complain to, shut down the Facebook office or try to put some local executives in jail. And then Trump has a choice. Do I support these people who are the tip of the spear for me in this dollar craze? Okay, great. What do I say? I will tariff your goods 100% if you discriminate on Facebook being able to offer WhatsApp payments. Guess what happens? Those payments go away. Oh, Besant goes, hey, XYZ elite politician in the Philippines, I know you've been stealing people's money and putting it in JP Morgan in New York. I'm going to sanction you and take all your billions of dollars unless you let Facebook put their stablecoin into the Philippines. And guess what happens?
The European Union is reportedly exploring the use of major public blockchain networks such as Ethereum and Solana as part of its design for the upcoming digital euro. According to a report from the Financial Times, the European Central Bank (ECB) is considering whether the digital euro should be issued and operated on an open, public blockchain rather than a private one. Traditionally, private blockchains restrict access to authorized participants, offering more control but limiting transparency. In contrast, public blockchains like Ethereum and Solana are open to everyone, allowing transactions and data to be verified publicly in real time. This openness could add credibility, transparency, and innovation to the ECB's digital euro project while also aligning with the EU's broader efforts to modernize its financial infrastructure. If confirmed, the decision to explore public blockchains would represent a significant milestone for the digital euro, which has been under discussion for several years but has yet to finalize its underlying technology framework. Leveraging public blockchains could also enhance the digital euro's interoperability with existing decentralized finance (DeFi) systems, potentially increasing its adoption across Europe and beyond. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.